Hello, Legacy Wealth Creators. This is Hilary, and I am going to talk today about real estate investing versus real estate gambling or real estate speculation. So, why this is important is when you want to create a legacy, it is important that you are not doing things with speculation, you are not gambling with your legacy. You want to plan your legacy. You want to make sure that your assets keep on performing even as you continue to grow, and also as you continue to plan on how to transfer your estate to the next generation, or even to have these properties support your lifestyle during your retirement. So, what do I consider as investing? And investing is when you make sure that the property has good intrinsic values and cash flow. So what do I talk about when I talk about intrinsic values? What do I mean? I mean the property needs to be in a good location, that the population in the area is diverse, that it is not a small town, that there is a rental demand and it is not from just one type of tenant, that there is an opportunity for property growth, property appreciation, but I am not depending on the property appreciation. And the most important thing is this property cash flowing? Is it giving me money every month? And is the finances that I'm getting, is it able to cover my financing costs, the taxes and repairs? I mean, is it able to cover the cost of me holding this property? And is it giving me a little bit of cushion so that in case the interest rates go up or things change, I have a cushion that can enable me to weather that kind of situation. So when it comes to speculation, you are depending on external market forces. So these are things like you are purchasing a property with the hope that the property is going to increase in value. So you don't want to bet on future conditions because those future conditions can change dramatically and it will affect the way you are going to make money. So what are the type of speculative real estate investments out there? And this has been something that a lot of people have been going through, and a lot of people have actually suffered and even lost properties because of this. During the time when properties were increasing in value very fast, pre-construction flipping became a very, very big thing. This is where people purchased condos or homes before it was built, and they only had the intention of holding it and selling it before the building is even complete. So they were purchasing the property not with the intention of closing. They had the intention of selling it or assigning it to somebody before it is completed. Now, some people made a lot of money out of it, but some people did not. The reason why it's gambling is because they were betting that the market value will rise very fast, okay, and it will rise faster than the construction timeline. Now, what happened was a lot of properties were postponed or delayed, okay, And some properties that were supposed to close earlier have ended up being delayed, and now when it comes to the time that the properties are ready to be occupied, the prices have dropped. So what is happening is the buyers are not able to secure the financing. They are not able to secure the mortgage. Why? Because the property value that they bought it at is higher than the current property value, which means that they have to come up with the difference. And I've seen people, I have somebody who contacted me recently whose property was, when they purchased it, was 1.4, but now it's 1.2. The value is 1.2. So they have to come up with $200,000 in difference so that they can close this property. Of course, the builders do not want to lose money. So if you are not able to close, you are going to lose your entire deposit, and you will potentially be on the hook for the entire amount if the builder is not able to sell the property. So this is speculation, and a lot of people, as I mentioned, people made money, and some people have been found in a very, very precarious situation. Now, the second one that I want to talk about is where an investor buys land that is often agricultural or industrial, and it is normally on the outskirts of the developed areas, and they hope that over time the municipality will rezone these lands into residential or commercial, because when they rezone it to commercial or residential, you have an increasing value. So the gamble here is you are betting on the political decisions coming to your favor, and this sometimes may not be in your control. Now, it is different if you are in the political party that is in power, because probably you can influence the policies, okay? But for majority of us who do not have political affiliations or political godfathers, it is difficult because you cannot control the outcome. So what are the risks? The risk is that sometimes the city can decide to change their growth plan, so they are no longer expanding. They may decide that now we want to have high density buildings, and that is what we concentrate on. So they may decide to now rezone the existing residential properties, so that instead of having single families, you can have multi-families, and that change could affect the property that you are holding, because you are hoping that it was going to be rezoned. So that is a risk. Now, another one that a lot of people do is sometimes you buy a property in a growth market where the property cannot support the rental income. So the rental income that you get does not cover your mortgage, your taxes, your insurance. So you end up being cash flow negative. And this has happened many times in markets like Toronto, where people were buying condos, okay, for $1 million, for $800,000, and renting it to individuals. And when you calculate the amount of expenses versus the rents that they were getting, they would pay out of pocket every month just to own this asset. But the issue is they were betting on a double-digit appreciation. So you are betting that this property will appreciate higher than the amount that you are removing from your pocket, and therefore you will be ahead of the game when you sell it. The risk is when the interest rates rises and the prices level, if the prices do not go up, if the properties do not appreciate, then you end up burning even more money. You end up losing even more money, and eventually you may be forced to sell or even lose this property. So that is something that you should be aware of. Don't purchase properties that cannot be supported by the rental income that you are getting. Now, another one that people do is speculating on what I call the path of progress. So you've heard the city is going to have or the government is going to invest on a transit line or an infrastructure or a new headquarters or even a casino. So because of that announcement, people decide to go and purchase properties around where that investment is going to occur. Now, the challenge with that is that you are betting on these external catalysts to transform your neighborhood so that your property value will go up. There is a big risk here where the infrastructure projects that are announced are normally delayed or even sometimes for decades or even cancelled entirely. And this will leave you as an investor with a property in an area that cannot have its own demand. It doesn't have any demand. And there are a few projects that come into my mind. For example, there was a project that was supposed to have a pipeline from Alberta to take oil to the US. Now, if you invested in an area because you knew that that pipeline is going to pass through your property and therefore you would get advantage, you'll get the advantage of that infrastructure. The challenge with that was that for that property, for that infrastructure project, the government had talked about it, it had been approved, and then there was a change of government in the US and that project was cancelled. So what do you do as an investor? You end up having a property that has very little value to you, because if that infrastructure is not there, you are not going to have any appreciation on the property that you purchased. Now, the last thing is some people build luxury property in an area which is not proven. So don't get me wrong, you can build a luxury property in an area if you intend to live in it, because you are building a property that is custom to you. However, if you are investing, you do not want to build a property that cannot be supported by the market around the area. So you don't want to bet on a specific wealthy buyer who will come and purchase your property when you finish constructing the property. The challenge with luxury properties is that they are very illiquid because they depend on somebody who is price agnostic, somebody who does not care about the price. They are looking at the property. And if you are investing, you want to be able to have many buyers competing for your property. So avoid these investing in these luxury houses in areas that are not proven. So how do you plan strategically to invest for your legacy? So the first thing is you need to invest for consistent cash flow. So you need to invest for yield. invest for something that is going to keep giving you money every month so that you can support this property. The other thing is your time horizon. Your time horizon should be 10 years and above. You should buy a property that you will be comfortable to own for the next 10 years or more. Now, the other thing that you can do is you can mitigate your risk by buying a value add property. So instead of waiting for external factors to help improve your property, you buy a property that you can force the appreciation. So you buy a property that has inherent equity, force the appreciation, and bring it up to a market value. That way you actually have equity in the property. And then the last and the most important thing is purchase a property that has income that can support its financing and also the expenses. This will enable you to sleep well at night because you will not go back into your pocket to purchase to help support this property. So that is it, legacy wealth creators. Don't speculate. When you want to invest, talk to professionals and let them help you. Let them guide you through the process. Let them help you so that you are objective, so that you are using data to make your decision. I don't want you to use emotional attachments to make decisions based on how you feel about a property. No. If it is an investment property, it has to make money. So get a good realtor, an investor-focused realtor. Talk to me. I'm an investor-focused mortgage agent. I have a team of other people who can help you, property managers, contractors, who can help you in your journey of creating your legacy. Because your legacy depends on you. You need to create it so that you can pass it along to your family. Thank you very much, and God